Why the is the market underperforming? Why are you all so miserable? You are sadly deluded. The bulls get miserable and start questioning their own lives and whether they this whole thing up, and nothing happens. It's going to die. Raoul said Sui's going to go up and he's a moron, and it's just like, it's terrible and I've got everything wrong and it's the worst thing. You just say, well, I might as well turn my computer off and stop around on X. Keep trying to say this 1,000 times and everyone goes, oh, why did that chart break? It's like...
This is Elliot from the Early Stage Investor. Our goal is to make life-changing returns. We stay on top of the most undiscovered revolutionary assets on the planet. What we've been covering on this channel is when the bull market will come, when the world will finally wake up to these assets. It took Amazon 10 years of chop before it finally skyrocketed. It did do a 600 or 700x move. That's the game we're playing. So whether or not we have to deal with short-term volatility or not really doesn't matter. The game we're playing is life-changing returns. So we've been staying on top of Raoul Pal's updates because he talks about liquidity. He talks about what actually moves the market. In this video, we're actually going to look at the assets that he thinks are going to skyrocket and his price targets and what it means for Chainlink and ICP. But first, let's hear from Raoul on the macro setup, what he thinks about where we are in the cycle. Again, we know liquidity moves these assets. Where are we now? What's the current update?
Let's talk about where we are. What's going on? Why the is the market underperforming? Why are you all so miserable? Why are you throwing poo at each other? It's because you don't do the work. The business cycle is the daddy. The business cycle has been lackluster. As you know, the ISM survey has been slow. The ISM survey is actually driven by liquidity, but ahead we should start to see ISM grow. Obviously, we've got this government shutdown that may still kind of cause another month or two of weaker ISM because of the government sector. Maybe not. We'll have to wait and see. I'm indifferent to it because we know where it's going.
So based on what he just said, we have this government shutdown. That could cause a delay in the pickup of the ISM. We've covered how the ISM is almost the #1 indicator of where crypto assets go, right? Look at what it's done over the last 3 years. This represents the crypto bear market, a crash in 2022, flat, choppy market. That is exactly what's happened. You can't expect revolutionary assets to be discovered in environments like this. One of the reasons a lot of the early internet companies didn't survive wasn't because they didn't have good ideas. Chewy is a multi-billion-dollar e-commerce company for pets. Back then we had pets.com. In the right macro environment, pets.com would have become Chewy, right? It didn't. It went bankrupt because the macro environment was so horrendous. So the macro environment kind of decides whether or not these assets pump. And so this is the macro environment. It's been horrendous. Raoul Pal thinks we may be coming out of it. And what he just said was that now we're dealing with a government shutdown. It could cause a few more months of delay for the ISM to finally go up. But he's not worried because he knows what comes next. And again, we're going to look at charts of specific assets and where he expects them to go and which assets he's the most bullish on.
Does global liquidity have another down month? Probably, possibly, maybe 2 months. No, I think it's a month. And then what happens is it hooks up with financial conditions as we go into the end of the year. So October would print as a weaker month, obviously because of what is happening with the US government shutdown, where there's less liquidity being pumped in the system. But I'll come to that. And then the ISM follows suit. The ISM is where, when we get above 50 and start expanding, is where alt season is. It's where the small caps start going. It's where the riskier credit starts moving. That's the real game in town. You need a booming economy and lots of liquidity. The way you can make money by just throwing a dart on your screen and whatever it hits will go up. That's to come. Those are the banana zone points when things really accelerate. It's all coming. It's a matter of patience. Don't forget, the ISM has one data point a month. And you think you're trading it with your tick charts on your screen. You are sadly deluded. That's not how this works. So hence why you just kind of do nothing and let this play out. Interestingly, gold is basically current financial conditions. So financial conditions and gold are all in the future. And so when you look at gold against total liquidity, it's telling you liquidity is about to explode. And that's a really interesting thing. Gold has shifted around. Sometimes it's real rates, and other times it's other things. Other times it's just the dollar. But right now, gold's highest correlation in this kind of Bayesian world where probabilities shift and correlations shift is it's all about financial conditions. And it's basically telling us the financial conditions here are going to explode.
Gold's been absolutely skyrocketing. It's been front running a potential massive amount of currency debasement and liquidity and money that's just about to be dumped on the market. The gold money is like central banks, big, massive whales putting hundreds of billions of dollars to work. It's front running a potential huge boom in liquidity. What do huge booms in liquidity mean? They mean massive bull runs for altcoins. Maybe the world's realizing what the Trump administration is about to do when Jerome Powell leaves.
The PBOC is going to be stepping on the gas. Interesting. Look when it peaks. It peaks in 2026. That's super interesting. This is the chart that everyone on Twitter has got a different time horizon for. This is the one we've been using. I've not really shared it super publicly, but this is gold with a 188-day lead, so 6 months lead versus Bitcoin. I mean, it's noisy, right? Nothing fits perfectly. Keep trying to say this 1,000 times, and everyone goes, oh, why did that chart break? It's like, so what it suggests to me is we have catch up to do, and that goes into the end of the year. And then we'd have a period where everyone says the cycle is over, and what happens is nothing. The bears get really aggressive and it doesn't work. The bulls get miserable and start questioning their own lives and whether they this whole thing up, and nothing happens. And then eventually, April, May, as ever, it explodes higher again. That's what this is telling you. I think this is probably the closest estimation in my head and what I think plays out.
That's his closest estimation of how it plays out. It seems to work like clockwork every single time. Bitcoin follows gold, and it makes sense. Bitcoin follows liquidity. Gold front runs liquidity. He's saying it peaks in around 2026. He's saying the business cycle is extended. Now, yes, we have to deal with one of the biggest leverage liquidation events in history that we just had to deal with, probably because the market was super spooked about a government shutdown or whatever in the short term. Negative news, right? More pain for early stage investors in these assets, but liquidity is increasing. If that happens, altcoins, Bitcoin, all skyrocket. Currency debasement. So Bitcoin's been flat, rates have been high, liquidity has been constrained. Gold is front running a massive increase in liquidity. He thinks these assets skyrocket. That is his best estimation for what comes next. I agree. I think there could be a potential massive sell-off if inflation gets out of control because they print too much money. That's a concern for later on, more like later in 2026, potentially. Obviously, lots of volatility, but we're heading into a potentially massively bullish zone. Yes, the government shutdown might delay it a month or two. So now let's dive into his price targets for his favorite assets that he's the most bullish on. And we're going to see exactly what that means for the other undiscovered assets no one is talking about, but are more revolutionary than the assets that he is talking about. First up, Ethereum.
Ethereum, one of the world's great charts. Here we are, retesting the breakout of the wedge. One of the world's greatest wedges. We saw these kind of things here. It breaks out, it does this. Remember when it broke out here? Did this, and then eventually did that. That move was 310. I mean, it's like a 10x. So what's it going to be from here? Who knows? 10 to 15,000.
So he thinks Ethereum heads to $10,000 or $15,000 in the next move.
Could it come back down here? Could this be a little mini wedge? Could it come down? Yeah, probably. Does it come down to here? Possibly. Don't really care. And you shouldn't either. If you do, you're doing something wrong. You're either using leverage or you are too short-term in your time horizon. Solana, look at that. Let's go back to ETH. So this Solana chart is this period in ETH. Sort of, because the pandemic kind of screwed it up a bit, but let's call it this period in ETH is what we're seeing in Solana now. So it kind of did the wedge pattern. Again, depending how you draw it, nothing's ever perfect. If this is a flat top wedge pattern, and somewhere around here, it finds its base, hooks up, and then it will have the power to break through, and we can have a serious move, the move we've been expecting. That's still to come. That's how the second cycle plays out. Then you consolidate again. And that seems to be, if I go back to Bitcoin, let me change that to the monthly chart. If we look at kind of the second cycle, it did this, it had the correction. They all do the same kind of pattern as you get the adoption. The first move is brutally large, then a decent sized pullback, and that was a huge pullback. Doesn't look like it in the chart, but guess what? Let me change this from a log chart just so you can just see how brutal it was to own Bitcoin back in the early days. It was that brutal. It was so brutal that you have this massive run, enormous, gigantic pullback, and then a stupid run, gigantic pullback, stupid run, gigantic pullback, stupid run, right? You get the picture. Okay, so that's Solana. Nothing exciting to see. Sui. Oh, look at that chart. Nothing wrong going on here. We're just basically in a wedge. So do we come back down to the wedge? Well, let's have a look at the daily chart. Could we come further back down in here? Yeah. Could we even test $2 again? Yeah. Does it change anything? No. What should we be doing? Buying. and not going, it's going to die. Raoul said Sui's going to go up and he's a moron and it's just like, it's terrible and I've got everything wrong and it's the worst thing. Nothing. When you look at the macro framework, you look at the longer term charts, you just say, well, I might as well turn my computer off and stop around on X, looking at some traders saying the top is in. It's highly unlikely to be in. Highly unlikely, because the macro's nowhere in. And I don't get it. I don't get all these people talking about it's the end of the business cycle. It's the beginning of the business cycle, not the end. It cannot be the end of the crypto cycle if it is the beginning of the business cycle. It's as simple as that. But no, people just want to use a chart and suggest that no macro matters. I love this chart. This is Sui ETH. We used this when we really went overweight Sui back in 2024. And we've got a very similar pattern here. What we'll see is a pull down here somewhere, and then we should break this trend, and then we come back up here, and we should get a dramatic outperformance. This is Sui Solana. We've been pulling back to the bottom of this pattern, and what we should see is over time, we'll stabilize somewhere around here, whether we break back down through here and then come up, and then we should, if we're right, break through in 2026 all the way through here. So we're still pretty happy about all of this stuff.
So he's bullish Sui. He thinks it outperforms Ethereum. He thinks it outperforms Solana. What we've been covering and hammering home on this channel is that the assets within the crypto universe outside of the top 10 are all correlated. Here's a chart of the total crypto market cap, excluding the top 10 dominance. Terrible. Here is a chart of the asset that he is bullish on. Sui, over the last month, it's cratered. It's done terribly, right? Down something like, let's say, 20%. He thinks it can actually go further. It seems like what he thinks is the US government shutdown extends the sell-off. He thinks Sui could go maybe to $2, not panicking, bullish. Well, that's his favorite asset, Sui. Here's a chart of Chainlink. Fallen not as much, but it has fallen a bunch. Chainlink is actually in the top 10 assets, right? So it's slightly not quite as much of an altcoin as Sui or as ICP, but it has fallen. He sees more potential downside for these undiscovered assets. What about ICP? Fallen 20%, in line with what Sui has done, right? So you cannot be bullish on any of these altcoins outside of the top 10 without realizing that in a massive liquidity pump, they will all be correlated. They are all perfectly correlated today, right? The market has no idea what is going on. We are investing in the Las Vegas desert before a single building was built. We're investing in the foundation. If you can use any sort of logical reasoning, you can understand how massively bullish these assets are going to be, how much money they're going to make, how much activity is going to be on them when they tokenize the world's value. But right now we're investing in the desert. So no one really knows which plots are going to do the best, which land is going to do the best. They are all correlated, and it makes sense. So in the very short term, we're all correlated. Sui, ICP. If he's bullish Sui, well, it's making the exact same pattern as ICP. According to the Sui chart he put up, from here, if we extrapolate, he thinks it skyrockets, making a new all-time high and making a similar move to what it did at the end of 2024. Back then, it went from like a 70 cents up to $5. Raoul Pal believes that this will hit $20. Based on the chart he's putting up, he thinks it breaks out of this wedge and hits $20. He thinks that's a 10x for Sui. It's following the exact same pattern as ICP. That's a 10x for ICP. ICP hits $30, $40. Chainlink, slightly bigger. We know how massively revolutionary Chainlink is, but can we expect Chainlink to hit $100 based on his charts? Absolutely. I think the 4-year cycle is broken, though. I think we're at the stage where Web3 really takes off. Here's the chart of tokenized assets. Skyrocketing. This is brand new. This didn't exist in the last bull market. We're at hundreds of billions of dollars of wealth moving on chain. The world is moving on chain. On chain is the new online. So I think we start with a 10x move. Maybe we get a massive sell off in 2026 when inflation runs too hot because they print too much money. That's possible. But I think after that sell off, the cat is out of the bag. These assets take off just like Amazon took off and did a 600 or 100x once the world realized how valuable they are. So we get lots of volatility, but in the short term, if that's all you care about, I think a 10x for all of these assets. It makes so much sense. They're all correlated. They're all totally undiscovered. When liquidity rushes in, they're going to buy them indiscriminately. In the short term, 10x for each of these assets. Sui, ICP, Chainlink. Longer term, we start to see the highest quality assets outperform. So thank you for your support. I appreciate you. Keep winning, survive, probably some more sell-off in the meantime while the government shut down, but massive bull run ahead.